Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where each week we teach you how to invest wisely and safely. Well, we've got a special episode for you, and I say that it's special because it's based off of the free ebook that we released. And to give you a little bit of context, the ebook that we did is meant to be read like a reference book. So we got the inspiration from something like a Tools of Titan or Tribe of Mentors, if you're fans of Tim Ferriss, where he consolidates advice from his favorite people he looks up to. That way you can ingest it in a bite-sized type of fashion. So that's what we did. We asked previous guests, professional investors with decades of investing experience, and we consolidated it into a package that you can open up at any point in time when you're trying to invest in something. You want to learn something new about investing, you want to better your skills, open it up to a page and see one of the 5 questions that these investors have answered. And if you want to download your free copy that's loaded with tons of value, all you have to do is go to ebook.tgwipodcast.com. Again, that's ebook.tgwipodcast.com.
So for this episode of the show, we picked 3 of the questions to share our answers with you. So as Kevin just explained, we had previous guests, wise investors with tons of experience, answer the questions. On today's episode, me and Kevin are going to answer the questions that we asked them. We'll answer our own questions. And so we're pretty excited to share that with you. Also, there were 5 questions and we're answering 3 on this show. We'll share the other 2 answers with a select group of insiders. And later in the show, we'll tell you how to get into that group and be one of those insiders.
And the first question that we asked our investors was, what advice would you give yourself as a young/new investor? So I proposed that question to Adam.
Okay, so Kevin, my advice to my young self would be start sooner. Start sooner and buy real estate as soon as you can. If I could go back in time and find my younger self, I would say, Adam, work to buy real estate as soon as you can. Get your first property. And I think starting with a single family rental is fine. But if I were able to catch myself young enough, I'd say house hack. Find a little duplex or a triplex or a quad, buy that and move people into those other units and let one of your friends stay with you in your unit. I mean, you could be cash flowing like crazy while you're learning the power of this investment strategy. So that would be my advice to me. Kevin, how about you?
Yeah, so what I would say, I think starting early is a fantastic thing. It's one of those, man, I wish I started early. I wish I started reading a bit earlier. So what I would say is to pick an asset class, whatever that is. It may be, like you mentioned, a single family home. It may be multifamily. It may be mobile home parks, whatever it may be. I would have told myself, find something that you like, find something that you want to be a part of, and then dive into it. Learn as much as you can with all the energy and focus that you think is required. Get a mentor. Allow them to coach you in the direction that you want to go. I would also say start with books, blogs, and podcasts, because that would really help you just absorb as much knowledge as possible. You almost want to drown in the amount of knowledge that you have. And of course, there's going to be action involved. So networking with people that are doing exactly what it is you want to do. Ultimately, what I'm saying is build the skills that will allow you to buy any type of an asset class. There are nuances for each niche in real estate investing. However, there are going to be some foundational skills that will take you much further in life than just real estate. So that's what I would also position is learn the soft skills, learn how to negotiate. Or if you're not a good negotiator, learn to find somebody that can add value to you at that capacity. So picking an asset class, developing those soft skills, and learning as much as you can.
Yeah, that's great. And Kevin, before we move on to the next question, there's one more thing I want to offer to people who may feel like they're a little bit older. and they've kind of missed the opportunity. Don't feel that way. I didn't start investing until I was in my 40s. So it's never too late. I felt like, oh man, I really wish I had known this when I was young, but it's never too late. So don't think that. I mean, if you're older and you're just learning about this, the advice that Kevin just gave is super advice. Just dive in, learn about it, and start with your first one. So, Kevin, what is um, one piece of advice you would give to a working person about how to ensure a secure retirement?
That's one of the questions. Pausing.
Yeah, that's the next
Oh,
question I had. Did we get them out of order?
I didn't know. Okay.
What is a piece of what's yeah, let's
I
see.
have
That
what
was
are
it,
three
right?
tips for the upcoming crash and how do you assess risk? I didn't see this question.
Oh, okay. Well, do you want I could start over. You want me to do the three tips?
Was that one of the questions we asked? I should read the ebook.
Yeah, dude, we better double check, right?
Yeah, let's just double check.
Pause recording, maybe. You
Oh
think?
yeah, that's a good
Or
idea.
is it
Instead of,
easier to
yeah,
edit? So, Kevin, what is one piece of advice you would give to a working person about how to ensure a secure retirement?
that is a good question that I wish I thought about even earlier on, as well as convincing younger Kevin to start learning about real estate. I think cash flow is king. So buying an asset that is going to pay for one expense, whatever that expense may be. Maybe it's I don't know, your car payment or whatever. What paying for your mortgage, ideally, so you're living for free. But learning how to buy something that pays for your lifestyle. The reason I say that is because a lump sum of money is an ideal situation where you have, let's say, $2 million. I don't know very many people that have $2 million sitting in their 401k, right? But you can imagine the buying power you have with $2 million and how much cash flow you can generate with that instead, and how much of an income that can generate. So, learning how to buy something that can pay some type of an income, and that may be while you and I are partial to real estate, that could be stocks. I don't know much about it, but you could get something that pays dividends. Ultimately, buy something that is going to produce a stream of income.
Yeah, Kevin, I think one of the best books on this topic is Killing Sacred Cows. And we reference that in the ebook as something you should check out as a next step. And it really helps you understand why what you just recommended, having something that provides you with an income stream, is so much safer than having that big lump sum, the $2 million in your account. It does a phenomenal job of explaining that. So I encourage people to go listen to that. But I will just say, I completely agree with what you said. I mean, to boil it down, my one piece of advice would be to invest in real estate that cash flows. And the way I think about retirement since I begun to educate myself on, financial and freedom and wealth matters is it's changed quite a lot. I used to think about retirement in terms of having enough accumulated to be able to live off of this scarce bit of interest that it would provide me and just hoping I never ran out of money before it depleted. Right. But now I think about buying these assets that cash flow. And as you said, well, will pay for things that you have for expenses you have in your life. Do that while you're still working. As that's paying for things, then retirement is kind of a non-concept almost. It's like it's no different than any other time, right? My assets put off cash flow that pay for things I need. I choose to work on things I love doing.
Like podcasting.
Right. Exactly. So it just changes everything. It's less about hitting some age and having enough in some account. It's just, well, I'm going to spend my time how I want to. The money my assets generate will allow me that freedom.
And I'd make an argument that if you can buy assets that accumulate a certain level of cash flow, if you wanted to increase your lifestyle, you've already learned over multiple transactions how to do that. So if you said, you
Right.
know what, I have $5,000 a month in passive income, I want 10,000. well, then go after it. You know how to
Yeah,
do it. I can guarantee you'll have the team in place to do just that.
it's a great point. And you can kind of do it incrementally. Let's say you're living comfortably on 5,000 a month. With your tax rate being so much lower, that's way more than 5,000 a month in earned income.
Exactly.
So if you are comfortable, but you're like, you know what? I'd kind of like a 48-foot fountain boat.
Yeah, why not?
I mean, something random. Uh, Buy an asset that'll pay for that.
Exactly. And good luck doing that on a fixed income.
Yeah. And then take me and Kevin for a ride if you buy that.
Precisely. Yeah. We'd love to join you. And then we'll do a podcast from the boat.
That'd be pretty cool.
All right. So, one of my favorite questions that we asked the guest was, what are your 3 tips for the upcoming crash? And I know that sounds ominous. It sounds like gloom and doom, especially with what you're seeing in the news as with
Right.
coronavirus and how the economy is being affected. But I think it's a relevant question. So, what would be your tips, Adam?
Yeah. So my tips would be it would start with being conservative in your underwriting and deal analysis. So make sure you're taking into account what the market might do in terms of higher vacancy rates, being able to charge lower rents, because if people lose work, they're not able to pay, or they're not able to pay as much if they get downgraded in their job. So taking that stuff into account and really stress testing your deals, being very conservative in your underwriting. So you're not buying an asset that is thin on profit, thin on cash flow, and then doesn't cash flow when that happens. That's very important, right?
Yeah, I agree.
Okay, so the second one is going to be don't let fear stop you from investing. So, one thing I did when I first really learned enough about investing to realize, hey, I need to buy a property here, it's time to pull the trigger. It was around 2016, and I was thinking the market was going to correct because I had learned by that time that, well, according to previous cycles, it should be starting to turn
Right.
right now. So I mean, so I held off for quite a while because of that and passed up a lot of potential opportunities because of that. It was fear stopping me from investing. If I hadn't done that, I'd have more cash flowing properties in my portfolio right now. So don't let fear stop you. And once I talked to a few more experienced people who said, look, get in the game. You have to get in the game to start playing. So once I realized it was just a matter of finding a deal that worked and getting in there and doing it, all kinds of things started to open up for me. And it was just a phenomenal experience. And I started to learn, and that's when I really started gaining momentum, right?
Yeah.
So don't let fear stop you from investing. And then lastly, I touched on this in the first one, but only do deals that cash flow. With an upcoming potential correction or crash, whatever it's going to look like, only do deals that cash flow and would cash flow at least enough to pay for themselves during the worst years, but would profit during all other years. So, nothing that doesn't cash flow, and I think you'll be in pretty good shape.
I agree.
So, how about you, Kevin? What are your 3 tips for the upcoming crash?
The first is probably, I think, the hardest one is to not panic. Herd
Yeah.
mentality is a real thing. I didn't grow up in Florida. So when there was this panic about, I can't remember the last hurricane it was, we talked about it in the last episode. I go to Costco, and on an off day, I took my lunch to go there, and it was a madhouse. It was packed. The lines for water, you only get 24 packs per person, per household. I was like, whoa, I didn't go in there panicking. But by the end of it, I was thinking, do I have enough stuff? Am I prepared for what's coming? So that herd mentality is very real. When you are sitting around with your coworkers and you're kind of lamenting about, man, the 401k, blah, 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 everything's down, I should sell, whatever, you're going to start to feel that. And that is a real thing. And know that that is going to happen. That being said, don't act on that panic. Don't use emotion. Remember, think about
Right.
the math. Think about the math of your investments. If you try to sell and you think you could time the market or whatever, like don't do that. That's a terrible, terrible idea. Ask any financial professional, anybody that you investor, they will tell you don't try to time the market. So try to avoid that panic by using math and being rational. If you have to talk to somebody, reach out to us. If you want to bounce some ideas, we can try to help you. We are not licensed financial advisors or anything like that, but we can help kind of just ask questions to help poke holes into the emotion of what's happening. The second point I would say touches on what Adam was talking about is being conservative with your analysis. If you want to, you can't predict what's going to happen. You really can't. You can do your best, but being conservative, you're looking to mitigate your risk as best you can. And that is what the most successful investors do. If you've mitigated your risk as best as you can, then you kind of just have to go with it. And if you take a loss, even though you've done your best and most conservative thing, that's just how investing works, right? That you win some, you lose some. And then the third is cash flow is absolutely king. If a deal cash flows and you see that, oh my God, my rental is depreciated by 50%, don't sell. Hang on to that bad boy. If it's continuing to cash flow, let it cash flow. Let it sit. That's part of also piggybacking on point one. Don't do anything. You're only going to lose money if you sell what you have. So those three things are what I would say are tips for the upcoming crash.
All right. Great tips, Kevin. Great tips. So we asked a couple of fun questions also in the ebook, and we're going to answer those as well. So, Kevin, what's your favorite piece of technology from back in the day?
I was thinking about this question a lot, and
Me too.
the first one that I really thought of that I think is kind of unique, you don't really see them now, at least in the States, are internet cafes. And I know it's not a piece of technology, but rather an experience, if you will, with technology.
Mm-hmm.
And I say that because I was in my teens. I was playing Counter-Strike on the computer. I would get like $20 from my parents. That would last us the whole day. A buddy of mine and I would go. We'd take a break, go to McDonald's, and it was just a fun thing. We would play video games at the internet cafe all day, and that was probably my favorite piece of technology.
That's cool. That's a good one, man.
How about you?
Well, I thought about this a lot too. And I'm like, wow, man, when you go back pretty far, like when you go back before the internet, you start to question what's technology. Right? Was a CD Walkman technology? Was
where you move and then it skips?
Technology? But anyway, I think what I landed on was a IBM PC Junior, which is my first computer. You probably don't even know what that is.
No idea.
Yeah. That bad boy had a 64K 5.25-inch drive, which was pretty nasty back in the day. And I had when I played video games, you would hear the drive start spinning, and then a little message would come up and say, "Please put disk B in." Pull out your disk, put the next one in, and then it'd start spinning again and tell you what just happened in the game. It's great. So anyway, yeah, I think that's mine, man.
That's awesome, and that's why I love we come at it from different perspectives with our
that's great.
Our age. Not that you're that much older than me, but different experiences with technology.
Right on. So we talked earlier in the show about how we're going to tell you a way to get the other two answers, and we're going to have this select group of insiders. So we'd like to explain a little bit of that with you right now. Kevin and I are starting TGWI Insiders. So Tech Guys Who Invest Insider Club. And this is going to be a group of insiders who we share additional valuable content with. And we're pretty excited about it because we're going to start sharing little nuggets of value with you who are in that group. And we're just pretty excited about the idea of being able to add a little more value to people who are interested in getting a little bit more than just the weekly podcast.
Yeah, on top of that, the added value will be things like maybe our opinion on our favorite piece that the guest answered, and we dive into that. And our goal isn't to be a whole separate podcast. We want, as Adam was mentioning, a little nugget, so a morsel. We're thinking less than 10 minutes of either a video or an email or us talking about an article or books that we read. Ultimately, you want to add additional value to those listeners, to those insiders, if you will. And if you want to be part of that insider community, it's simple. All you have to do is go to subscribe.tgwipodcast.com. Again, that's subscribe.tgwipodcast.com, and you'll automatically become one of the TGWI listeners. Or when you download the free ebook at ebook.tgwipodcast.com, you will also become a TGWI insider. And we'll send emails every Friday so that you get that nice little nugget before the weekend. And if you want, you can open it up on a Saturday morning and view that nugget of investing knowledge with your cup of coffee.
Absolutely. And we'll put those links in the show notes for your convenience. And we hope you have enjoyed this episode of Tech Guys Who Invest. That's it for this episode of Tech Guys Who Invest. This is Adam.
And this is Kevin. Thank you so much for listening to us. Don't forget to join our Facebook page where we're building a community of investors so that we can share ideas, tips, and other ways to help us get out of the rat race. If you found value in this podcast, it would mean the world to us if you could share it with your network. Lastly, we love feedback. It's how we get better. So if you wouldn't mind spending 30 seconds and leaving us an honest review on iTunes or Stitcher or whatever platform you're using, that would be super sweet. If you want to get on Adam or Kevin's calendar, go to tgwipodcast.com/contact. We want to help you invest safely, wisely, and ultimately get you out of the rat race. Thanks again.